Hey, welcome back, guys. Exciting times, exciting times. Now, before we officially start, I would like to see everybody is on the live stream. So we have friends that are from Telegram, we have friends that are from TikTok, we have friends that are from Facebook, we have friends from YouTube as well. Welcome back, guys. I'm back to the live stream. Excited, joyful, happy. Found myself again after a long holiday of Chinese New Year. And for those who actually come back, after a long holidays just like me, welcome back. Welcome back to Profit in Peace. Welcome back to RX and welcome back to the financial market where we're gonna try to make money peacefully. All right, not excitingly. Now, before that, let's take a look at is everybody on track, okay? Dun, 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 bum, bum, bum. Hey, we have two concurrent viewers. Hello, hello. Is there anybody in the live stream right now? Hello, guys. Welcome back to the class, guys. Welcome back. Exciting, joyful, slightly happy, slightly excited to share with you guys about the live stream today. I prepared some really nice material for you guys, and I hope that you guys will love it. And I believe that if you guys pay a really good attention on the class today, I promise you, I cannot promise you profit, but I can promise you inspiration and a shift of perspective. Okay? Now, let's see. Are we connected? So if you guys are already in the chat box, in maybe from YouTube or TikTok, sit back, relax. We can have some chill conversation together before we officially start. I'm still waiting for my production team. I'm still waiting for my production team to do it. All right, we have Mark. Hello, Mark. Ready? Welcome back. Welcome back. I know that you're ready, but we gotta wait a while, okay? Navi Alarm. Right, Navi just saw it on YouTube. And Paul say, I'm in. Guys, welcome back. We have 5 current viewers already. What are you guys doing? Are you guys enjoying your Monday so far? Are you guys still in your holiday? Are you guys still in your holiday? Risky say, Sir CG bring great vibes to every class. It never feels boring. Thank you very much. It is my principle to really deliver something that me, myself, believe in. And I believe in an educational style. My teaching philosophy always start from myself. If I love it, I'm inspired by it, I will teach it. Okay. I just cannot accept knowledge that is not being owned by myself. Right? Every time I teach, I try to be as truthful, as authentic as possible. So I'm really glad that you guys love it. All right, cool. Now we have people coming in Telegram. Guys, welcome back. Welcome back. Oh my God. Love it. Love the vibe already, guys. Okay, before we start, you know how I roll. We don't always go into the market directly. Okay, for me, I love to teach by providing you guys a framework. I love to teach in a way that you guys can actually understand the entire framework. So it's like a mental warm up. It's like a mental prep work. So you understand, the prep work, you understand the framework, and then after you have a clarity on what's going on, then we move to the market and do live analysis and perhaps a few trades together. All right. So usually this is how I roll. Usually this is how I teach, and this is what I believe in. I don't believe in hyping you guys up. I don't believe in making you guys excited and then go to trade as much as you want. I don't believe in that. That is not how I trade. That is not how I preach. That is not how I teach. All right. So we have Alan, Navy, Paul, everybody coming in already. Okay, guys, if you guys are ready, click in ready in the chat box, okay, to let me know that you guys are ready and we are gonna start the session together, okay? Right. Before that, let me close part. Let me open the music. Just fine. Love to chill. This one, you guys remember this? We're not gonna use this for now. We're gonna use this for later. Okay, when we're doing analysis, we're placing trade, we're gonna use this later. This is a ritual of mine, but not now. Now I'm gonna lay the framework for you guys so that you guys can understand what I'm gonna teach. All right. We have Risky, Kalini, Brian, Lavender, Alvin, Akash. Everybody says ready, and then we are going to the market right now together, and let's move on. Right. Now, today I'm going to start with something that is really, really important that I want you guys to understand. The way most people pick up trading is the reason why most people give up trading. Okay, I'm going to like highlight that. The way most of us, pick up trading is the reason why most of us give up trading. Okay, and if you want to understand this really contradicting, slightly paradoxical statement, you got to sit back, relax, and listen to the very end. All right. Why the way most people pick up trading ends up become the very reason why most people give up trading. All right. So how most people actually enter trading. That is the first thing that I want you guys to first, reflect on and think, right? How most people enter trading. Well, most people enter trading because they see the profit, right? Because they see the profit. They scroll it on Instagram, they scroll it on TikTok. And then the second thing would be when they go into the market, they go into the trading, what they see is the lifestyle, right? They see people driving a Ferrari, they see them driving a Lamborghini, driving a Porsche 911, going to Dubai, wearing nice watches and spending money like this. Okay, this is why people go into trading, right? And more importantly, they see the confidence. But is the confidence real or is the confidence fake? Nobody really understand that. Now, this is actually the top 3 reasons why, people actually go into trading. But what most of us don't see at the early stage, it's not early age, early stage of trading is that we don't see the structure. Most of new traders, when they go into the market, they don't really see the structure. All they see is profit, lifestyle, confidence. Profit, lifestyle, confidence. They don't see the structure, right? So what is structure? If you don't see structure, how the hell can you make money? You gotta remember this, right? Now, here I'm gonna show you what is outcome thinking versus structural thinking. Okay, because if you pay attention on outcome, which is the lifestyle, profit, confidence, okay, you are anchoring your psychology only to profit, and you judge your success by per trade. So if one trade make money, you are a very successful trader. If one trade lose money, you are a pathetic trader. And then another trade make money, you're gonna be a successful trader again, and then you're like yo-yoing around with the profit and losses. You judge yourself based on that single trade, right? And your emotions is not stable. The emotions is not stable because that you are always moving. Not only the market is volatile, but your emotions is volatile as well. So your emotion is like, the volatility is like a candlestick moving with your profit and loss. And why is that? The reason that happened is because that you are actually using outcome-based thinking in your trade. And I want you guys to understand, real traders, mature traders use structural thinking. And structural thinking actually anchored you to the environment. You judge your success based on the entire, process. And your emotions are stable across trade. Why? Because you are understanding the structure instead of anticipating and looking forward for the outcome. Is everybody agree and understand what I'm trying to say? If you guys can understand what I'm trying to tell you, please in the chat box say agree. Okay, so outcome versus structure. So outcome thinking is what I say by profit, lifestyle, and confidence. But real trader, mature trader that are stable, that are calm, that are coherent internally and externally is because that we think in structure. Okay, we think in structure. All right. So Charlie Teo actually say agree, and Cashby says such a structural thinking. Yes, structural thinking, and that's a very big misconception, right? A misconception about trading is that especially technical analysis, charting artists out there, think that trend lines is structure. Well, I'm gonna really, clear the fog, right? Trend lines are not structure. I'm going to repeat it again. Trend lines are not structure. Why? Because if structure were just higher highs and lower lows, it means that your children, your brother and sister that are 7 years old, 12 years old, well, they can master trading in 10 minutes, right? If structure were just, higher highs, lower lows, it is so easy. You go to the market, you go to the chart, and then you just see, higher high, buy. Oh, lower low, sell, right? So if trend line is structure, then everybody can trade. Okay, everybody can trade if trend line is structure. Okay, so here's a thing that I want you to understand. Visual patterns doesn't equals to structural understanding. I need you guys to really ingrain and try to internalize this, what I'm trying to say, right? Visual patterns are not structural understanding. And Risky say, a trend line is only a reference, not a guarantee. Yes, Risky, a trend line is only a reference, not a guarantee. And more importantly, a trend line is not a structure. Because if trend lines are structure, we can actually, place trade. Everybody can trade, right? Just like Air Asia, everybody can fly. Now, if higher highs equals to buy, lower lows equal to sell, now everybody can trade. Everybody can become a multi-millionaire. Don't have to work 9 to 5 anymore. You can fuck your boss and then you can just go to Bali, Thailand, Phuket, Hawaii, travel around the world, right? But it is not as simple as that. You need to understand things that are invisible, what's happening behind the scenes, right? Now, another misconception, the very first question that you need to answer is what makes the price move? Okay? A lot of people, they go into the market, they never ask this. They look at the chart, they download the indicators, and then they fine tune the indicators, and then they try to like understand everything by looking, adjusting, buy and sell signal, all this thing going on without asking yourself the most fundamental question of all: what makes a price move? And some people will say that news is because of news release actually makes a price move. Okay, or price trends, right? When there's a trend, the trend will keep on going, so trend will make price move. Okay, and market momentum, or market momentum will make price move. Guys, these are all illusion. Okay, what actually makes a price move is not news, price trend, or market momentum. It is something that is so fundamentally ingrained, carved into the very existing of the financial market. So guys, do you guys want to understand what makes a price move? If yes, click yes, so that I can understand you guys are really exciting to learn, not only to trade, but also to become a profitable, mature trader. Do you guys want to understand what actually makes a price move? If yes, click yes in the chat box, guys. I want everybody to really being pulled inside this conversation together, and let's have a discussion so that you guys can actually learn from the class. Not only just waiting for signal, not only just waiting for analysis. I want you guys to really feel the emotions that is stimulating right now, right? We have Surya say yes, Damien say yes, Javier say yes, Charlie say yes. Thank you. Iskandar as well. Thank you very much, guys. Thank you for the response. Now, in 3, 2, 1, I'm gonna explain to you what actually makes a price move. Guys, price move to find agreement, not to confirm prediction. I'm going to repeat this again, guys. Okay, price move to find agreement. Okay, price move to find agreement, not to confirm predictions. Okay, market are a price discovery auction. So what does this actually mean, right? Price move to find agreement. Agreement between who? Agreement between buyer and seller. So price is moving to find that sweet spot, that price that buyer and seller is agree, and we shake hands together. Okay, price don't move because that it is bullish back then and then it's gonna bullish right now. No, that is prediction. But I need you to really change your mentality, because why? If you base on the very fundamental reason why market move, is because that there's a buyer and a seller agree to buy and sell and make a trade together with that sweet spot. Not because of the prediction. Buyer don't predict to the seller and seller don't predict to the buyer. Buyer and seller just negotiate, and then, okay, this is the price that we agree, so let's shake hands and we're gonna agree with the price and let's do a trade together. So price move to find agreement, not to confirm your prediction. Guys, understand? Okay, so basically the old secret of market is not charts. Okay, the old secret of market is not charts, it's not indicators, guys. It is an auction. Okay, the old secret of market is not chart, it's not indicators, it's auction. It's between buyer and seller, the auction between buyer and seller. So let's take a look. Today I'm going to introduce you the very fundamental hypothesis, right? A hypothesis, an assumption that is being tested for decades. It's being tested for few hundred of years since the very beginning of the financial market. Is what we call the auction market theory. Okay, AMT. And I want you guys to really learn about auction market theory, because auction market theory is the fundamental of my trading strategy, of how I use indicators, of how I provide signals, how I go in, how I go out, how I stop loss, how I take profit. Is all grinded by auction market theory. It is the anchor point of everything that I do. The way I teach, the way I trade, the way I create, the way I do recording, everything is based on auction market theory. right? And today I'm going to share with you guys what is auction market theory. Now, auction market theory is a market that is assumption with a market is continuous negotiation of value. First thing first, you need to understand price don't move to be correct. Price don't move to be right. Okay? Price move to find agreement. Okay? This is the very first shift that you need to change when you try to understand auction market theory. I hope that I can help you to do that. I really wish that I can go into your brain and like, pop. But the truth is, it's going to take some time for you to really absorb it. Why? Because everybody, when they go into the market, the very first thing that they do is that they think they think binary, right? It's always like bull or bear, right or wrong, black or white, up or down, sell or buy. It's like binary. Everybody is trying to, think in a binary perspective, like price move to be right. Okay, but you gotta understand, price is not moving to be right or wrong, right? Price is not moving to be right or wrong. Price move to find agreement between buy and sell, right? Buyer and seller. So when agreement actually breaks, the price start to search for a new agreement, okay? Until new market value is found, okay? Until new market value is found. And it is actually very obvious, okay? And something that I want to ask you guys is this. If the market is constantly searching, right? If the market between buyer and seller is constantly like negotiating, what price we want to like buy and sell, what exactly are you trying to predict? The fact that we are trying to predict the next price is like you're trying to predict during the auction is still going on. And it is stupid to do so. Sorry to say that, but it is extremely ridiculous and stupid to do so. I'm saying this to myself as well. Back in those days, 6 years ago when I first started trading, I learned from my teacher, I learned indicators, and all I'm thinking about is about direction, right? Is it up? Is it down? Is it up? Is it down? But the truth is, if you always think from up and down, well, guys, the same goes to your account as well. Sometimes you profit, sometimes you bust, right? So what I want to tell you, if the market is constantly in a shift that is always searching for agreement, what exactly are you trying to predict? You cannot predict anything. You cannot predict anything because the auction is always happening right now, every single second. You get me? I know that it's a little bit abstract. I know that it's a little bit complex, but guys, if you really sink in and you really stay in the class, and you will actually learn a lot from me. Okay? Now, why this perspective actually changed everything? Okay, it changed because if you understand auction market theory, you went from prediction to observation, and you went from patterns to participation, and you went from looking for to be right to be aligned. Guys, this is what I want to teach you. Okay, observation, participation, alignment, it is much more important than prediction, patterns, and being right. Because observation, participation, being aligned is upstream, and prediction, pattern, being right is downstream, right? It's the same chart and different reality. Okay, so here I'm going to share with you the real reality of how actually market move. Okay, if you really look at the lens of auction market theory, between buyer and seller, it is always balanced, right? When you look at the market, if the market is ranging, right, it means that the state is actually between a balance, okay? It established the initial state of an equilibrium, all right? And balance always end up with compression. Why there's a compression? Because either some of the seller are eager to sell more, or some of the buyer are eager to buy more, and it forces, okay, it's actually forced, the market to go into the compression, which I'm going to show you, okay, balance, compression, and expansion later on. So expansion, and then expansion happen, it forms the breakout, and then a pullback, to retract or reverse to a previous position, and then it forms to a new balance. So this is actually the market cycle. The market always move in balance, compression, expansion, pullback, and now new balance, all right? And then balance, compression, expansion, pullback, new balance. I want you guys to take a screenshot of this page, like a lens, right? Do you wear contact lens? I wear contact lens. So this is like a lens. If you wear this lens, guys, and we go to the market, you will start to understand why I say what I say. All right, this is the market cycle. Now, the next thing is, how can you actually trade in this kind of market? Okay, now today I'm going to teach you my very own trading strategy. I have two trading strategy that I use to do auction market theory trading. And the first strategy would be agreeable rotation model. I call it ARM, or some of my students call it ARM, right? ARM. Okay, so agreeable rotation model is designed for stable market where I monetize and make money from price acceptance. Now guys, I want you guys to really pay attention on this one. ARM is actually a trading strategy that is for intraday trading that I use for live trading, and I use it to monetize on price acceptance. Okay, and then the next thing would be the second wave probability, SWP. SWP is where I start to monetize on rejection. So I trade for the continuity after the pullback. Okay, so this I do for swing trading, and this I use it for intraday trading. Okay, so guys, you have risky class. So we wait for the pullback before we enter. We wait for a pullback before we enter. That's safer. While risky, the question that you ask is actually a question that is more leaning towards second wave probability, which is SWP, right? So for SWP, we wait for a pullback before we enter. Okay, but for ARM, we don't do so. For ARM intraday trading, we use a different thing, because one is try to make money from rejection, and one is trying to make money from acceptance. And I'm gonna show you guys and teach you guys, ARM today. So guys, are you guys ready to learn ARM today? Now, first thing first, if you want to learn ARM, if you want to learn agreeable rotation model, you need to first understand something. ARM, which is ARM, only works when the market is in agreement. Okay, it doesn't work trendy, it doesn't work in a state that is chaotic. It only works when the market is in agreement. And I want you to understand that there's a specific, very strict rules to really spot agreement in the market. Okay, and before we go into the market, I want to teach you guys something, right? You need to understand what is I'm on, and I'm off. Okay, right? So I'm on and I'm off. So I want you guys to remember, starting from today onwards, I'm gonna teach you guys ARM. Everybody that come to my live stream gonna learn about ARM, and you need to memorize this. Okay, I'm on and I'm off. Okay, on and off. Now, first thing first, we try to filter out the market that is I'm off, and we only pay attention to the market that is I'm on. All right. So first thing first, what is the structure that we are looking for I'm on? Now, first thing first would be something like this, a value area. All right, a value area like this. We are looking for price overlapping that is very, very easy to see. Okay, now if we spot a pattern like this, it means that it is on. Okay, and next, let's take a look at okay, this is on. Now, what do I mean by off, right? This is on, this is off. Now, off is simple. The price is moving, overlapping sustainably, and then suddenly it has a breakout. Okay, a very strong close outside the range, and pullback fails to re-enter, continuous structure forming. This is off. If I look at structure like this, it means that we don't trade such structure. Understand? So guys, are you guys ready? So if you guys are ready, click on arms on. All right, arms on in the chat box. Okay, arms on and arms off. Okay, so market selection, very simple. We're gonna focus on market that has very high liquidity. We're gonna focus on gold and one or two, perhaps three major forex pair, depends on the volatility. Okay, because we want a spot for market that is rotating with genuine liquidity. We need liquidity, the market that has a lot of liquidity in the market, so that we can actually trade market that is arm on. So Risky, thank you very much. You say arm on, guys. Thank you. Arm on. All right, arm on. Okay. So time frame infrastructure. Today we're gonna share with you. I'm gonna share with you usually when I use ARM, what is the time frame, right? What is the time frame that I actually use to use this strategy? Now, first thing first, I'm gonna use H4, which is the 4-hour time frame, to see the big environment. There's no daily, there's no weekly, there's nothing to do with monthly, just the 4-hour time frame. All right. So the H4 time frame led us to have a very, very good picture on, what is the environment like, right? Is it compression? Is it expansion? It is meant to answer us, is the broader market stable or unstable? Thank you, Kalini. All right, Kalini and Lavender say, I'm on. Lavender, thank you very much. And we're going to use H1 to see the session structure, okay, which will define the intraday value range. And okay, for H1, which is the 1-hour time frame, is the place where we're going to decide I'm on or I'm off. All right, we're going to use the 1-hour time frame to identify I'm on or I'm off. Okay, so, and we're going to use the H1 time frame to determine the boundary as well. Okay, and for the execution, guys, because it's intraday trading, we're going to use M5 for execution. We're going to entry at value extremes only, observe stall, rejection, define stop and target, execute the rotation. So this is where we trade. So H4 for the environment, H1 for structure, and M5 for execution. Okay, so we're going to use environment first, structure second, and execution third. Okay, now the validation and invalidation. Okay, you need to understand why do we enter and trade, and why do we want to exceed the trade. Okay, we cannot go into the market without a parachute and without a set of rules. If we go into the market without a set of rules, guys, it is like trying to go to skydiving without a parachute. You're basically trying to fly higher, because when you drop to the ground, you go to the heaven, right? So this is what I'm trying to tell you. Okay, so we don't do this. We need a parachute, and today I'm going to explain to you what is the parachute. Okay, now ARM, what makes ARM validate and what is invalidate? Okay, first thing first, validation, the entry logic. The price reach a defined value extreme for H1, especially we use H1. Okay, and M5 actually shows stalls, overlap, rejection, and the break attempts fail to hold outside the range, pull back and then goes back to the range, no strong expansion momentum, agreement is intact. Okay, this is validation. Okay, we enter if all these signals is there. And invalidation, while a clean break and hold outside the value, okay, after the range it break out and then it doesn't come back, so it is invalidate. We are probably gonna be stopped, and then we're gonna try to search for other opportunity, right? So this is something that I want you to understand. Okay, we trade acceptance, we monetize on acceptance, we exit on rejection. Okay, this is, I want you to understand, we trade acceptance, we exit on rejection of acceptance. Okay, guys, now before we start live trading today, I think enough of briefing, enough of pre-briefing before live analysis and trade. Here is an important risk disclaimer. Now, the lot size that I use today, it reflects my live trading setup. Now, usually when I trade myself, I don't use lot size that are too big. Now, because my career as a professional trader, but also a professional performer, teacher, and guru, that I want to monetize on education and the public internet appearance as well, I am willing to increase my lot size just to create more teaching materials and a little bit spice for people to gain traction. So guys, the lot size that I use today, it only reflects my live trading setup. Okay, I increased 10 to 20% more of the risk that I see it as like a marketing and advertisement fund for myself. Okay, it does not represent a recommended size of your account, so don't follow my lot size. That's what I'm trying to say. Okay, don't follow my lot size. And I want you to understand risk no more than 1% per trade and use smaller lot size. Okay, just don't follow my lot size. You should always use a way more smaller lot size than comparing with me, because we all want to grow our small account, right? So this is what I'm trading. So Risky say when arm is on, the chart looks like it's moving sideways. Okay, Risky, that's a good question, because right now we are going to the market and start to analyze together. All right. So I hope that you guys are ready, because right now we are going to the market and really take a closer look on the market. Now, before we start, there are things that is very important, which is a small ritual that I always do before I enter the market, to remind myself the outcome has nothing to do with me, and all I need to do is to focus on the refinement of my decision. So decision quality is way more important than the outcome. So this is actually a small ritual that I do, and then I don't look back. Okay, we're gonna start right now to analyze the market, and let's go, guys. Okay, cool. Okay, now we're gonna do something special today. We say that we're gonna focus on Euro US dollar and two major pairs, right? Euro US dollar, two major pairs, and Euro USD and GBP JPY. So I'm gonna give a mark here. Okay. And let's take a look at the gold market. All right, let's go. Alvin say let's go. I'm ready, and thanks CG for the daily guidance. You're welcome, Navi. All right, Charlie, thank you very much as well. Now, first thing first, when we go into the market, because we are actually using ARM, right? We're using ARM, agreeable rotation model, and we are doing intraday trading, which means that 4-hour and daily is not relevant to us. Okay, so first thing first, we're gonna go into the 1-hour chart and take a closer look. Now, the first thing, when we say take a closer look, what are we actually looking at? Okay, what are we actually looking at? The first thing is we're gonna find market that, you know, is price acceptance. Okay, where is the price being accepted? Okay, this is the very first thing that we need to understand. Now, guys, for this one, if you take a look right here, this is not acceptance. This is not the model that we want. Okay, this is not ARM. This is arm off. Okay, why is this arm off? Very simple, because this is already not considered a market that is actually, you know, being agreeable. We are looking for agreeable rotation, and I'm going to show with you guys what is agreeable market rotation. Now I'm going to use this, okay, which is the fixed volume profile. Okay, now you see, if you use the volume profile and then you take a closer look at the market, and you have a really good glimpse on, you know, where is the buyer and seller that is most balanced, right? Which one is the most balanced? It's actually somewhere around here. Okay, now right now I'm going to close the volume profile, and I'm going to draw a small trend line so that you guys can understand what do I mean by, you know, agreeable. Okay, what do I mean by agreeable? Agreeable means that the price is being accepted by the market. Okay, before we do anything, before we trade, I teach you guys how to spot, you know, agreeable market structure first. Okay, this is not agreeable. Somewhere around here. There you go. Okay, there you go. So this is what I call, you know, agreeable. Okay, and then during this phase, this is what we call, you know, overlapping but still this is not considered a price range that is a price range that is still relevant. For us, this is arm off. Okay, this is arm off, guys. So for gold and US dollar, are we actually looking at a structure that is reliable? No. For gold, I'm gonna say is arm off. All right, is arm off. The reason why it's arm off is because that we already, miss the structure that we can use ARM to trade, which is, right here, continuity. Okay, not continuity, sorry, it's about like, price acceptance. Okay, price being accepted at this place, this place, this place. And now let's take a closer look using the volume profile and see where is the buyer and seller, pretty much agree with. You see? There. This is the price. So if you take a closer look, what is the price that is being accepted, by the market? So the price is actually 5,034. Okay, 5,034 USD, around this price range. Okay, so this is where the volume, which is buyer and seller, agree to play with this line. But right now it is, not really, moving in our favor. So therefore I will actually say I'm off. Okay, but if it forms a new formation, then I will say that it is something like the structure we are looking for is on. Okay, On Kao asks, how many live sessions will there be today? Every day, Monday to Friday, we will have 3 sessions. All right, we will have 3 sessions. From 2 p.m. to 4 p.m. will be me, and from 4 p.m. until 8 p.m. all the way to 8 p.m. there will be Wei Long, Alan, and Pram. Okay, so this I'm off, but it's okay. Let's take a look at the gold. Let's see, is it forming a structure that we want? No. So a big part about our trading is that we're gonna filter out things that is not worth our, not worth our look, not worth our energy and attention. So gold, I'm gonna pass, and now we're going to Euro US dollar, and really try to do some charting first. Okay. Okay, right here. Yep, this is the price. When we want to do the ARM trade, we want to look for buyer and seller agree the most. So for now, for this area is 1.18, $1.18. Okay, 1.18648, which is around here. 1.18648. Set it. There's a structure. Let's make it thicker. Okay, so guys, this is where the price is actually, playing around this area, overlapping. Okay, this is where price is actually, agree to play with this price. So it seems like the price is actually, for Euro US dollar, Euro is actually charging back, this price range. So it's gonna be a retest, testing the price right here again. So it's climbing back up, and for now it is still not, a price formation that is, it is not in the market state that is, going back to the, it has a pullback. right? It plays with this price, and then it start to break out, break out, break out, break out with no obvious pullback, and then it start to go back to continuity, and it's tried its very best to climb back up to this range again. So for now, euro and US dollar, I think, it is not much for us to trade yet, okay, because the market state is currently in it is currently in it is not continuation, it is not balanced as well. It is actually in a phase where it's forming a compression right here, a compression, and then it will try to really play with this again, and then it will try to have a breakout. So it's actually slightly in a compression. Okay, now let's take a closer look. Continuity. Wait, guys, let me take a look at, the volume range. Yep, you see, there's actually two sessions where the buyer and seller is actually agree upon, the price. So it's another one is actually right here around this range. So we have a range as well. Somewhere around here. Yep. Found it. Let's draw it to make it more precise so that we can understand. So usually when we trade ARM, we don't, draw the horizontal trend line by using the wick, because we want to know, where is the price actually being accepted by the market, not rejected, right? So if we are trading, we are trying to make money from rejection, we will draw based on the wick of the candle. But because for ARM, we've tried to understand the state of the market, so which means that we're gonna use the body of the candle to draw the trend line. So right now I try to be more precise. So usually, this is where my OCD actually kicks in and try to be precise. It's just my thing. I love to draw it, as accurate as possible. It gives me a very good sense of grounded feeling before I do any trade. So yeah, guys, see here, is the price the market is playing, okay, that is bouncing right here, and this is another one. It's sort of like, trying to play another round right here. So there's a potential for trade as well, but the probability is not high. Okay, the probability is not high, to be honest. The reason why is because that if you take a closer look, the market is trying to form a compression here, 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 right? Let me make it thicker so that you can see. Okay. Okay. You see, so we have a very clear observation where the market is actually, based on what we see based on the volume between buyer and seller between $1.18 and $1.17 euro US dollar. These two price range is actually the range where buyer and seller is agreed to, have some fun, juggle around and play around this area. But right now, if you take a closer look, currently the market is still trying to move, in a compression state right here. So here I want you guys to understand, market, the market state is compression. Okay, it's dealing with compression and it's still on its way to trade. So can we like play around and trade during this phase? Yes, it is still possible to trade in this area, but before that, we're gonna zoom in and take a closer look at, the 15 minutes. Let's take a look. Let's go to the 4 hours and see. Still in a compression. Yep, the second one is actually here. Second price actually here. This is the spot that we're gonna use, around 1.18247. Okay, so we have a range. Okay, we have a range here that we can play a little. So this is a tradable range, slightly risky, but still it is a tradable range for us to consider. But let's take a closer look at the 5 minutes to see, what's going on. Obviously, it's still compressing. Okay, guys. Now, is it a tradable zone for us to make some profit? Yes, it is still tradable, but there must be, there must be something that is proof to me that the continuation is invalid, right? It's invalid. So right here, you see after compression, the price move up, after compression, go up, down, up, down, up, down, compression, and then it start burst, and then it start to go down again, go up, and then go down. Now, if the price didn't manage to really break through a new window and failed, it will probably go back down here. Okay, so here I would need the market to give me a valid signal before I place a trade, which means that it is somewhere around this area. Okay, now it's currently, having a pullback, but it seems that the market is very strong still. So it is still climbing its way up, to this point. It's still climbing its way up to this point. Okay. If we really follow the market structure to trade, And then you will understand that for this one, we are looking at long trade, buy trade for euro US dollar, because the market, in a bigger scale, it is actually, climbing back up to play around with a bigger spectrum market regime where it is playing with this, market acceptance. Okay, so this is actually what we are looking at. So if we take a look, a higher probability trade would not be doing a short trade, but actually a long trade, where I am going to actually enter a long trade where I'm not going to enter here, but I'm going to enter actually here. So I'm going to put an alarm. Okay. And then probably, a long trade, long position around here. I'm going to do a buy stop and let it ride the wave. Okay. So I'm going to raise like around this area. I'm going to make it short. Slightly, yeah, 8 pips. Okay. And then we're going to aim for at least 1, 2, 3. Okay, guys. Now, this is the area that I want you guys to set the alarm, because we are looking at a long trade at euro US dollar, a potential long trade right here. Okay, where we're gonna use the market compression as our momentum to make, a profitable trade. So here you can easily aim for at least 1 to 3 risk and reward ratio, and it would be fine, it would be okay. All right. I'm gonna show you guys. I'll take a snapshot and show it to you guys. All right. All right. I'm gonna let my okay. So guys, before we analyze the next market, let me write a note for you guys so that you guys can, really understand the logic behind. Just a moment. Guys, remember to set your alarm, okay? Set an alert at the price of $1.18 and 247. Okay, if the price break through that line, we're gonna put a buy stop. Okay, a buy stop here. Okay. All right, chat, please help me to write a note for my student that is in the Aurex Telegram channel, TikTok, and other channel as well. So based on the analysis of what we are trading today, we're actually looking at Euro US dollar and Euro US dollar intraday trading using the agreeable rotation model, where we spot, a market compression that is actually from the higher time frame, which is the 4H and 1H, right? So if you take a closer look at the chart pattern, you can see the market is actually forming a compression, where making a buy trade, a long trade, is much more higher probability comparing with a short trade, right? So we are using two hypotheses for this setup. The reasoning for the buy trade is actually because that the market is currently in a compression market state in a longer time frame, where it is also in a state where the market is still, accepting the range between 1.18648 and 1.1792 923. So this is the range the market is, playing around, even though that it is not that volatile, it is moving slow, but still it is a range that buyer and seller agree and accepted to, trade around. Now, I want my student to understand, for this trade, it is not the most perfect trade, but we cannot always wait for the perfect timing. Sometimes we're gonna take a little bit calculated risk to make some quick, small little profit in between. It's fine. So right now, because we have two hypotheses. First is compression within the accepted agreeable rotation model. So therefore, we're gonna make a long trade for this one. So everyone, remember to really set an alarm at the price of 1.18247. The logic is simple. If the current price actually break below, and then we're gonna open a buy stop trade where we're gonna ride the momentum of the pullback, and then we're gonna hit the TP, hopefully, finger crossed, because of the compression that is moving towards 1.18648. All right, so please help me to write a note for my students so that they can understand. Okay guys, it's time guys. Euro US dollar, EU buy stop. Euro US dollar trade. Okay, buy. Okay, Euro US dollar buy stop 1.18. Okay, Euro US dollar, go for long guys, go for long. Okay, Euro US dollar buy 1.18254. Okay. Yep. Just a moment, guys. I'm gonna share with you guys the setup. Okay, guys, take a look at the note. So next would be the invalidation. Now, what is the plan? What does it mean, for the price to actually, move from here to here? So we need to determine, okay, what does it mean if the price, break through and then it's going to be invalidate? Well, it's very simple. If the price, move beyond this zone, okay, it breaks like around this zone. Wait, just a moment. I'm going to use the action from here to here. Okay, so now the stop loss strategy would be simple. I'm going to set it somewhere around here. Okay, and stop loss at 1.18119. TP at 1.18526. Okay, I'm going to share with you guys the TP and SL as well. Okay, got it. Guys, take a look at the take a look at the TP-SL strategy. So, okay, we're gonna leave it. It's gonna be a long. So now, before we go on to the next pair and start to analyze, I'm gonna share with you guys the logic again. Okay, the logic is simple. If we go to the 4 hours, okay, we are not trading. We are not trading bearish. We are not trading bullish. Okay, we are not trading trend line. We are trading acceptance and rejection. Okay, that's a very big difference. Okay, so instead of looking at the chart like going down here or the chart going up here, we look at where the price is being, accepted. Okay, and what do I mean by acceptance? Now, first thing first, there's two ways to look at, acceptance and rejection. The first way would be using horizontal line to spot visually. Okay, visually, this is what we call acceptance. Okay, right here. And yep, this is what we call acceptance. Okay, and then the second way would be using this indicator, which is volume profile, to spot it. Okay, and then you can see the second line where the price is actually being accepted as well, around here. Two ways. Yeah, the second one would be here. You see, around here. So this is where the price, between buyer and seller actually agree to, well, to trade. So given this understanding, we can assume a hypothesis where this range right here is agreeable rotation model happening. While it may not be the perfect setup, but still it is actually an agreeable rotation model that is happening around here, right? Okay, it's happening around here. So this is what we call, but it's not the best one, I would say, but still it is tradable. I would give it like a 7 out of 10 structure. Now the second hypothesis would be, after the breakout, which is expansion, the market is trying to pull back to this zone, and then it forms a compression trying to test here again, right? So you see it is actually forming somewhere around here where the market is trying to do something like this. See? So this is what we are actually looking for. So the market is climbing, the way up to this range. So for me, based on the logic of this setup, what I'm actually doing is that I am actually trying to make some profit with you guys, hunting for this zone. Okay, hunting for this zone, and then here we do like a buy, a long trade, and then when it touches here, I'm gonna set an alarm for this zone, and then I'm gonna wait for a breakout, and then if there's a pullback here, I'm gonna do another buy. I'm gonna do a breakout. If it does not a pullback, it goes back here. Okay, it fails to go, continue, and then it start to go back down around here. It means that right here we can do a short trade, which is also still trading ARM. Yep. All right, get it, guys? So this is the setup for Euro US dollar. We have two opportunity. One is currently ongoing, position open, and another one would be 1.18648 at doing a short trade. If the breakout actually didn't continue and have a pullback, I'm gonna ride the momentum of this pullback, and then we're gonna do a short trade here. So I set an alarm and see how it goes. But right now, let's just wait for Euro US dollar and see how it goes. Oops. Yep, so far so good. Guys, anyone plays a buy trade same like me? Okay. So next, let's take a look at GBP US dollar. Same thing. Let's take a look at the environment first. Okay, environment. Okay. First thing first, we use the fixed range volume profile all the way from this area to around here. Okay, so there's a few. Now, when you use, this indicator, which is the fixed range volume profile, it is a very good indicator. I think specially designed for auction market theory, where we want to see which price is being accepted between buyer and seller. Now, the more balance, between the green and the red, it is way more better, because it means that, buyer and seller sort of like agree with this price, and price tend to go back and test, the price that's balanced. Okay, because 80 to 90% of the time, the market is always balanced. Rarely it goes to form a new balance. Okay, so here we can spot it. There's one section here, and another one is actually here. Okay, but here, do we have it? No, this is like buyer is stronger than seller. Here we might have, but before that, let me do some charting. Yeah, this is obviously overlapping price this section, see, overlapping. Okay, this is a range. Yep, there you go. Is there like a more obvious one? Yep, this is a more obvious one. There you go. Okay. ARM, you know, right here, agreeable rotation. Not the perfect one, but still, it's a very good hypothesis until, you know, compression, breakout, and then the price, you know, go back down again and try to really play around this area again, right? Okay, so we can use this as a hypothesis where this right here is actually the range that the market is much more prefer to trade around this section. Okay, around here, it may not move that perfectly because we don't know how the market want to move, but based on probability, you know, this is actually the zone between $1.35 and $1.34. It's actually the zone that the market tends to, you know, try to want to come back. You see, after the pullback, you know, after compression, pullback again, strong pullback, and then goes back up, and then, you know, go back to the continuation again. So which means that it is very strong that the market, you know, between this zone right here is a zone that we can, you know, do arm on. Okay, so this is what we call agreeable rotation model, and let's take a look. Lucky 7 has says that, sir, may I know what this indicator is called? Well, it's actually called the fixed range volume profile, where you can just go, you know, to TradingView. It's actually free right there. And the main thing about, you know, fixed range volume profile is to really spot, you know, where is the price that is being accepted, you know, by buyer and seller, right? In auction market theory trading, we don't forecast the direction of the market. We try to understand the state of the market, which means that instead of, you know, I'm going to show you an example. Like some people, you know, when they do trend trading, they try to forecast the direction, right? Now, this is the traditional way and conventional way for trading the market. Same goes to me. When I first learned how to trade, it's something like this. Okay, higher highs, and then lower lows, you know, lower lows, and then lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That means that I should do a short trade, right? This is the logic that, you know, we all have. Okay, this is, you know, downstream of that. But right now, if you use auction market theory to trade, you don't trade based on the forecasting of direction, because the truth is you don't know what the direction is going to do. You want to see where is the price where buyer and seller actually agree to play, you know, to do the trade, the auction, right? Agreeable. So that is why we want to use, you know, this one, the fixed range volume profile, and then so that we can actually have a good look. I'm going to show you guys, right? Have a good look of, you know, where is the market like. For example, I can go from here to here. See? And if you really pay close attention, you understand that this zone right here is where, you know, the buyer and seller is the strongest, you know, that is agreeable, right? This is where, you know, the price that is being agreed. And when you understand this, you know that where is the place for you to play arm on, right? this is the place for you to play on. Okay, so we found it, and then is it tradable? Not yet, because now we know that the market is actually have two ways. Okay, first thing first, it is currently, in a phase where the market is, we have found a zone where the market state is, being accepted between these two range. And the second thing would be the trade, and the price is actually forming a compression right here. Right, a compression. Okay, so it is a really good chance for us to really make a short trade for this one. Okay, but we need to zoom in and have a closer look. Yep, price is forming. Now let's take a look at the compression. Okay, so as you can see, the compression is still forming, is still valid, as long as, as long as the price didn't actually, go and challenge this place and broke it, it's still fine. So it is still valid between this zone, as long as it's not over this place right here. So it is still in a compression zone, even though that it doesn't look elegantly nice, but still it is still within a compression zone. And now it is having like a burst, a breakout that refused the compression, and then it start to form, a small structure right here. But still, I'm thinking that now let's take a closer look. Compression is being broken by this zone. There's a pullback, slightly uncertain. We'll see how, this zone right here actually plays out. Let's take a closer look at the 5 minutes. Yep, a breakout, and then, try to form a new zone right here. But we all know that this is not reliable. Why is it not reliable? Because the real acceptance zone is not here. This is what we call a micro one. The most reliable one is actually here. All right, this is actually the one that is much more reliable. So I'm going to use this as a signal where the price is actually, the real price that's being accepted is here. So for us, can we like make a trade here? Yes, but not that soon, because right now the price is, the price breakout, and then it's trying to pull back and trying to charge through, but it is still, nowhere near this area. And we're waiting for a new compression to be formed somewhere around here. Okay, we're waiting for a compression. Okay, so if there's a new compression, where the markets, start to disagree, and then it start to form a new compression. So we're gonna, do a short trade somewhere right here so that we can ride along with the assumption of this. Okay, this is where we're gonna look at. Okay, but right now it's still testing it, it's still playing with it is, out of the range. So for now, I'm just gonna take a look of it. I'm gonna set an alarm and see how it goes. So you can set an alarm for GBP US dollar at $1.35, but still we need a compression before we do any trade. Now before that, let's take a look. I'm gonna make a pending. It is tradable. It's not like gold, but let's take a look at gold. Let's take a look at Euro US dollar. Yep, still okay. Still charging. Moving kind of slow, but still okay. Now let's take a look at gold. Aim for very close overlapping obvious candle body where the price is being accepted. So take another look. So the real area is this one. Okay, this is the real area. Okay, now we found it. So yeah, this is what we call, the price as being agreed by the market, $5,027. Market is playing around this price. Flirting with this little level right here. The next zone, yeah, the next zone would be here. Yeah, somewhere around here. Yep, there we have it. So for gold, this section, okay, is this section. But right now, after the compression, they start to go back, have a breakout, and then now it's currently in a pullback. But for the first pullback, I won't do anything. I won't do anything for the first pullback. I'm going to show you if I want to trade this one, how I'm going to trade. So I'm gonna wait for this price to actually move from here. Okay, and then it will try to test this area. Now it's either, it break through and goes down, or it will have, a reaction right here. Now if it didn't manage to keep on going, and it will start to go back down in this zone. So this is where we can make, some intraday trading with a short trade, where we're gonna make ARM trade starting from, here, 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 and here. Okay, so this is what we're gonna do. But right now it is too far away from the zone, and we need to wait for a confirmation where the price goes back down again. But right now it doesn't have anything. It is like so far, so far from the gravity zone. But that is why we don't do anything. So am I gonna take a closer look? Yes, I'm gonna put an alert for this zone, and the trading logic would be waiting for this price, to try this key level and see will it like break or not. If the pullback, after testing this level and then it didn't really continue, and then it keeps on pointing down, we will actually, trade, use this as a reference to trade. But right now, nothing much to do. Okay, so still gold, nothing much to do. Yeah, have to be patient and wait for the right chance. You're right. Let's take a look at our euro US dollar. Still compressing, looking good. The floating is what I'm expecting. Still manageable. All right, let's take a look at US dollar, Japanese yen. Okay. Yep, we do have an obvious zone. Very obvious. So we gotta train two things. First, you've got to train your eye to really know where is the level. And then you cannot like rely on your eye too much, where you're going to use the indicator to help you to see things that your eye cannot see. So here we're going to take a look at where is the price. Yep, I think we found it. Can you guys see it? ARM, I'm on. But we're gonna like lock it even tighter so that we can really, hit that spot. Okay, somewhere here. So just to make, the market state filtering more accurate, more reliable, after I draw the trend line, I'll double check it. And this is where I'm going to use the fixed range volume profile. And then to really scan, is where I'm drawing the accurate one. Okay, see? Right. Here's one. Here's a second one. Now let's take a closer look. Which one is much more reliable? Okay, this is okay. But it seems like, this is the one that is much more, reliable. So I'm gonna pull that up a little bit. Okay, cool. Now the second one would be this one. This is the zone. Okay, we got it. Yeah, Forex pair is quite slow. The volatility is very low. But sometimes, it's okay to take some time, right? You don't have to rush it. Why want to rush in the market? If you're rushing, the expected value of your trading is actually way more lesser. So sometimes I prefer market that, need some patience because it increase your winning rate as well. Even though that I'm doing live stream, even though that I'm, trying to, show the trading strategy that I teach you guys, but still the more the real performance is not really performative. I don't know if that makes sense, but the real performance is where I show to you guys, no matter how I want to trade, I just follow the rules, real time. Yes, I know it's good for content, I know it's good for materials where I can, record it and show you guys a bunch of profit and losses, but guys, is this what you want to learn? You want to learn for being hype, or you want to learn to become stable, sustainable, profitable in the market? If you want to be sustainable, profitable in the market, well, come join me and we can, like, analyze the market together and be patient. You can just watch me how I use my thought process to really analyze the market to find for opportunity. I'm an opportunist. I manage a six figures account, and and I don't get to where I am today by gambling. I get to where I am today by, being patient, like what I'm doing, demonstrating now to you. So I hope that you guys understand, if there's no opportunity, there's no opportunity. For example, right now the market state, yes, it is arm on. We found it, okay? But currently it is actually still in the middle. So the next thing would be, to zoom in and take a closer look. Do we really have an opportunity right here? First thing first, set an alarm. Both here, 1 hour, to really see. Double check again. Yep, consistent profit is the most important thing, guys. Yeah, guys, we do have a zone here, but we have a range here. See? It's not bad. It's not bad. Pull back. Yeah, guys, guess what? We find ourselves a state, you know? We find ourselves an arm on state, okay? Arm on, guys. Arm on right here. Okay, we have arm on right here. Playing between two. So two opportunity. Arm on right here. Compression, expansion, breakout, and then trying to test it here again. So still Still, we need to set an alarm. This place. Okay, and then we go to 5 minutes and see. Can we place a trade? Yeah, why not? But not now. USD JPY, we need it to, form the compression. And then, yep, a compression. So the idea is this, the trading logic. The market is trying to form a compression within, the balance. Okay. And then we'll start to have a breakout. Okay, it will start to have a breakout. And then if the breakout actually fail, right? If it's actually fail, it start to go back down, goes back up again, and then goes down. We will take a short trade. Okay, we will take a short trade somewhere here. But still, we need to wait and see how does it go. Short position. But not now, guys. Nothing much to do now, to be honest. Still need to wait. See? Yep. So yeah, set an alarm, just wait. I'm gonna erase this just in case it create bias for me. I'm gonna put a pending. The market is really slow, guys. Slow moving market. Okay, so a quick recap. In case some of you guys are actually learning, with the auction market theory, and a quick recap just in case you want to revise and understand what does it mean. Okay, so a quick recap, right? So, quick recap. We went from, outcome thinking to structural thinking, and something that if you really pay attention when I'm doing live analysis just now, you see, we always try to really understand, price move to find agreement, right? Not to confirm prediction. So what do I mean by price move to find agreement? Well, it's easy, right? I'm gonna show you guys. Okay, what does it mean, price trying to find agreement? Okay, for example, this one. Okay, we take a look at the 5 minutes. Okay, so what do I mean by price move to find agreement? Based on what we see right here, the price is actually agreed to trade this range, okay, between here and here. So this is what I mean by price move to find agreement, not direction. So if we understand this is actually the price that is being agreed to trade, then based on probability the price is going to test here again, and then it's going to go down again. This is what I mean by price move by agreement. So we are not actually forecasting about bullish or bearish, long or short, but we are actually finding state that the price is actually being agreed to trade. So that's why we open this short trade, right? Because not because of the direction, because of the state. Okay, after you find where is the price that is being agreed by buyer and seller, you have a good glimpse and good probability of, understand long or short based on the setup that you have right now. Okay, so this is what I mean by price move to find agreement. Okay, and then what we are talking about is actually auction market theory, which is the price don't move to be right. They try to find agreement, and when the agreement breaks, price start to search until the new value is found. So what do I mean by, when agreement breaks, price start to search and until new value is found? I'm going to show you what do I mean by when agreement breaks. Okay, agreement breaks means this one. Okay, agreement breaks means that, let's take a look at the longer time frame. Okay, so this is what I mean by, the agreement breaks. Okay, the agreement, this is agreement, and then it start to breaks, and then it found a new zone, play a little while here, and then it breaks again, but still it is still playing, within these two areas, right? So if you look at chart, if you only use your eyes to take a look, you cannot tell the difference unless you know where actually the buyers and sellers actually agree to trade. So that is why I recommend the fixed range. That's why I recommend this one. All right, the fixed range volume profile, where you can actually use here, the entire range to understand where is the range that buyer and seller agree the most. Now take a look, there's a green and red, that is very balanced. The more balanced it is, the more balanced that the buyer and the seller agree and shook hands that, okay, we will try, we are very comfortable in, placing trade around this area. So that is therefore, that is why I draw the horizontal line around these two places. So you see, then we have an understanding of what the state is, and then we can see, the price start to move in, agreeable pattern again, compression, and then it will start to try here again. So that is why I opened this trade, you see. So this is the reason why. I hope that you guys can learn a few things from, what I teach today with auction market theory. Okay, this is what I mean by auction market theory. And until new value is found. So usually price, they prefer to stay in the agreement area until the agreement breaks, and the auction will always continue, right? So until the new value is found. So usually it always prefer to stay in balance, okay, because that is how the market moves. So the question is, if the market is constantly searching for agreement, we can't really predict where does it move. We can only understand where is it agree to trade. You feel me? So we cannot predict that is it buy or sell. We cannot predict that is it bull or bear. What we can know is that the weather is actually, okay, this is the place where buyer and seller agree. Well, it means that if I want to trade, it's better that I trade with this kind of market regime. Okay, so does it change everything? Yes, because we are not predicting price anymore. We are observing. We are not trading from patterns. Okay, we are trading from participation. Okay, we are not trying to be right. We are trying to be aligned. And more importantly, I think this one is the most important one. We are not trying to be right. We are trying to be aligned. And trying to be aligned is very different from being right. I'm gonna give you an example. Okay, so what do I mean by being aligned? Okay, I am trying to be aligned with where the buyer and seller agree to do the trade. I'm not trying to be right, because if I'm trying to be right, how would I trade? Well, if I'm trying to be right, simple. If I try to be right, I will go to the 4 hours, and then, wow, this is a lower lows, higher highs, lower lows, higher highs, lower lows. Wow, it means that it's gonna be a short trade, right? This is trying to be right, but this is not trying to be right. I'm not trying to be right. I'm trying to be aligned with what the buyer and seller, is trying to do with the market. That is why instead of using trend line, I use a fixed range volume profile to understand where does the player actually trade. You feel what I mean? So this is what I'm trying to teach you guys today in this class, okay? Did you guys learn anything about auction market theory today? If yes, please guess in the chat box to let me know that you guys actually learned a few things about auction market theory. Okay, so this is the market cycle, and this is how we actually trade. So to sum it up, just a moment, let me close this a little bit. Before we end our class, let's take a look at our euro US dollar. See how is it performing. Okay, yep, small trade, not much. We analyzed like 4 pairs today, but still we only managed to get one high probability trade. And finger crossed, let's see how it happens. Let's see how auction market theory actually plays the magic. Okay, if you want to learn more about auction market theory, you want to understand more about auction market theory, feel free to contact Grace, and the customer service and my personal assistant to understand more what we teach in the VIP group. Okay, and if you want to really, understand things that are fundamental level, feel free to contact them. And I'm really happy to share with you about the hidden, invisible underlying forces that actually move the price. Because there's two ways of trading. The first way is based on your eye, and the second way is to based on your brain to understand what is actually going on in the state. So more importantly, I want you to remember, we don't trade because someone make profit. We don't trade because someone, show their watches. We don't trade because someone drive a Ferrari. We trade because we try to understand the market structure. And for me, my trading philosophy has always been training my student about market structure first. Because if you don't understand market structure, you will always find everything is tradable, right? And based on this real life trading live stream, I hope that you really understand that not everything is tradable. We spent almost 2 hours together. 2 hours, guys, 120 minutes together, non-stop trading, me talking, analyzing, giving speech, giving everything, and then we only find one position to open. So this is how real trading is. As a matter of fact, if I'm trading myself when I'm alone, not doing live stream, I trade way much slower. Sometimes only one trade or two trade maximum per week, guys. And that is, the second strategy that I use for swing trading. But right now, intraday trading, even is intraday trading, I won't find opportunity everywhere. So guys, I hope that you guys learned a few things from today's class: auction market theory, and ARM trading strategy, agreeable rotation model. And if you really, want to learn more about what is I'm on and what is I'm off, I hope that you guys can come back to my channel. My name is CG, my name is Kelvin, and I thank you guys for investing 2 hours in this live stream with me. And for those who are actually placed a position for Euro US dollar right now with me, please don't hesitate. Show, your result in the group as well. If it's losing, if it's profit, it's fine. Just show the result and we're gonna grow, learn, and earn together, right? Now, before we close our class, first thing first, closing ritual as well. And the outcome has nothing to do with me. Okay, this is part of trading, part of life. Sometimes the big part about learning how to trade is the joy of learning as well. It's like fishing. You go out and fish, you learn how to, tie the knots, you learn how to use the right baits, but not every day you get a fish, right? So yeah, that is part of trading. But you meet new friends, you will meet new friends, you will learn new knowledge, you will discover new places to fish, and it is part of the progress to change your perspective from paying too much attention on the outcome, profit and losses, to paying attention of craftsmanship, of critical thinking. And for me, I I become a better trader when I don't pay attention on the outcome anymore. I start to pay attention on the process. I start to invest in the process. And the more I invested and grounded in the process, the more I'm grounded as a trader. And eventually, the scoreboard will take care of itself. You don't have to do this, all by yourself. All you need to do is to hang out with the right community, the right people, and with the right information, the right teacher, hopefully, and just, grow with us. All right. So right up next would be, I think, would be Alan or Prem. I'm not sure, but I believe that you guys can actually learn a few things from them as well. They are a very good partner of mine. We exchange trading ideas. We don't agree with each other all the time, but still we all agree with each other is that we cannot beat the market, right? We can only try to spot for opportunity in the market together, okay, to be humble. So hope that you guys actually learn, a few things, and I'll see you guys in tomorrow live stream. My name is Kelvin. Don't forget to click like, subscribe on YouTube, on TikTok, on Instagram, and on Twitter. All right. See you and bye bye.